Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law through this channel. I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each to have a return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, we're going to be looking at how George Palikaras and Brda are challenging FINRA, and then we're also going to be looking at a significant legal victory for Fubo. So before we get started, let's have a look at what's happening in the market. So first headline here from CNBC, we can see that the S&P 500 is inching lower on Thursday, today, as traders are bracing for a big Powell speech, and that will certainly have a significant impact on the market. So from Yahoo Finance, in terms of labour news, we can see the labour market is weakening and showing signs of levelling off. But obviously the Fed is still on track to cut rates in September, which is the positive news. And what we can see here in terms of breaking news, initial jobless claims came in at 232,000, in line with expectations. So obviously we do move over to look at Jerome Powell right now. So it is kind of neutral news, but the market should respond to that positively after Jerome Powell's speech. So in terms of the fear and greed index, right now the markets are basically neutral, waiting to see what happens. And finally, news with regard to Andrew Left. We can see here the short seller Andrew Left of Citron Research is now facing a federal indictment from the SEC and is in the process of currently selling assets, approximately $16 million, to hopefully to pay for people who have been harmed. If we look at section 29 and 30 from George Palikaras' statement, we can see here, first of all, he states from September 2022 to December the 6th, 2022, Meta Materials submitted the documentation required plus the payment to FINRA for publication of the corporate action for a 1-for-1 series, a preferred share exchange to FINRA's daily list. So that's what was supposed to happen. And then section 30, he goes on to state that FINRA published a notice that they have processed the corporate action, published it onto its daily list, and then stated that the shareholders with settled positions on the 12th of the 12th, which was a record date, will receive 1 share of NextBridge for every 1 share of MMTLP, which is what we were led to believe, and the pay date for that was to be the 14th of December 2022. So any purchases after that date, which is the 8th of December 2022, will not receive the distribution, will not be quoted, and the MMTLP shares will be cancelled effective the 13th of December 2022. So highlighted in red, he also goes on to say that this language was provided to Meta by FINRA's corporate action team. So again, I think that is evidence of a significant breach there. So who's lying? Is it George or is it FINRA? And that, I think, certainly needs to be tested. So again, we can see it has been reiterated by Brda as well. So in his earlier post, we can see corporate action was not what Meta submitted, i.e. it was potentially changed by FINRA, and specifically gave instructions to Meta's counsel to use the corporate action that FINRA revised verbatim. So obviously this was probably done over the phone, and not to change any of it or read into any of it. So in other words, FINRA changed it and told them not to read into it and not to comment on it. So what he goes on to say is most people were not aware that FINRA mandated and changed the corporate action. So I think that is the key thing that has not yet been dealt with regard to the FINRA FAQs, with regard to Congress, and also so far it looks like a judge has also not been able to understand or deal with that significant question. So shout out here to Zing, who's also posted with regard to the U3 halt panel from FINRA, and states that every one of these individuals needs to be questioned using AI evidence lie detector. And I think the significant person here we can see in the timeline is Patricia Cassimates. Again, the key thing I'm going to share with you here is that Mr. Rice had phone calls with Patricia regarding MMTLP's complaint. During the call, Mr. Rice reported that FINRA refused to provide the identity of the brokers or individuals that applied for the exemption, and Mr. Rice also reported to FINRA that the related brokers who applied for the exemption will not edit, delete or modify the false and outdated company information that was listed on the OTC Markets website. So again, this is hugely significant. So let's move on to a post here from Red ED, who stated basically Robert Cook leaves out important details concerning the MMTLP timeline, and I think that is also referring to what we have just seen. The saga is a complex financial story where the actions of FINRA, which is obviously an SRO, are under significant scrutiny. And the post goes on to ask a few questions. And number one, since when does FINRA write the corporate action? And in other words, if we look at precedents, when has this taken place previously? Because FINRA wrote both MMTLP corporate action, then did this not make them breach the Rule 6490? And that is something that has also not been dealt with, given the SEC's understanding of Rule 6490. When you have ignored it for 20 months, that FINRA mishandled the process. So the public were investing, retail investors were investing, American families were investors, and international investors were also investing. They were allegedly, let's say, deceived by FINRA in their failed obligation to coordinate the clearing, settling and processing of the corporate action. And I would go on to say that they stated that they did this to avoid uncertainty, i.e. the U3 halt, but they have created the biggest amount of uncertainty ever. And finally, shout out here to Sam, who's tagging in Scott. And Scott's posting with regard to FINRA as well, and stated that Harvard kids analysed FINRA and the cases and laws point towards its existence being unconstitutional. So Scott has been reading up legal matters on this. And what Sam has stated is that the walls are closing in on the regulators who are allowing and obviously potentially participating in market fraud. So from Congress point of view, we believe that this is now the time to subpoena the audited share count, protect the 65,000 plus families, including veterans, including pensioners, including international investors across the world. So again, we do need answers. And let's finish off by having a look at ticker symbol FUBO, and this was one of the stocks that we called out in our weekly watch list, as well as a number of others. And the other one I'm going to be sharing with you is ticker symbol OCTO, which we also called out with regard to a significant earnings beat. So let's have a look at first of all the chart for Fubo, and again over the previous 5 days it's been doing exceptionally well, up in excess of 54%. I think right now trading around about $2, and I think fairly close to level on the day in terms of at time of editing. So we're going to be sharing with you some data in terms of institutional investors currently in Fubo right now. And if we have a look at a number of these here, significant institutional investors going from Jane Street, Dynamic Technology, GTS Securities, Citadel, Bank of America, all of them buying 14th of August, 15th of August, 16th of August 2024, and the list goes on to include Legal & General, Millennium Management, Barclays, Royal Bank of Canada, with significant purchases all in Fubo over the last few days. And we also have a look at the analyst rating. Again, all of these in going back to May, July and August for 2024, with all of them having recommended this as a buy, apart from Seaport Global, which have just changed it from a buy to neutral. But now let's have a look at the news that was shared, obviously, with regard to Fubo, and the shares were trading up on Monday. So congratulations to everybody who got in on Fubo, especially on Monday when they were up close to 13.77%. And one of the key reasons for this was a legal victory for Fubo. So the company secured a court order temporarily blocking a joint venture between Disney, Fox and Warner Brothers. So great news there for Fubo. and the ruling actually for Fubo has been quite significant, and according to Fubo it would have consolidated control with regard to 60 to 80% of live broadcast sports content, and move that Fubo argued would limit their competition and reduce consumer choices, leading to higher prices. So great news there for Fubo. In terms of the CEO, he stated that this victory from the court is a victory for both the company and the consumers, and he says not only is this a victory for Fubo but also for the consumers. A decision will help consumers to access a more competitive marketplace. So let's see how this plays out. I'm going to finish off by sharing with the other stock that I shared on the watch list, which was ticker symbol OCTO. Again, over the previous 5 days, also up in excess of 20%. So if you would like to get a copy of our daily stock alerts as well as a copy of our weekly watch list, details are in the description below. Thank you very much for watching. Please stay tuned.